Hello guys, and welcome back in this new video. Today we are going to backtest a trading strategy from one of my subscribers. He wrote me an email to test his strategy. I remember you that if you want to backtest your strategy or you want more info about my software, write me at my email that I will leave in the description in order to use my software. But now let's read the strategy. Strategy is simple. Use Bolliger bands of period of 30 and RSI 13. Condition for buyer: price be below lower band and RSI must be below 30 and should be an engulfing candle in bullish side. Set stop loss last candle slow and take profit 1 to 2. So take profit is the double of the stop loss gap. And same for sell. Just make sure RSI is above 70 for sell, and you can do it on 1 minute BTG USD because it read it. So I use it. I used the BTG USD because I found some difficulties to download historical data for BTG USDT, but it's almost the same. And the data I'm using are from FXCM. So let's take a look at some examples. For example, this one, it was a short position at this daytime. So let's take a look at this trade, and it is here. It was generated at this daytime. It was opened here and it was closed here. And as you can see, it was a fail, as my software predicted at the exact same daytime. Then let's take a look at a long position, in this case a success. So it is here, was opened here, and as as you can see, it was a success. But now let's talk about the strategy. How is the code? So first of all, I want to say that the leverage I'm using is 4. Then here it is the code. So here I check the RSI. The close is below the Bolliger Bands low. For here we are in the buy, and I'm checking for engulfing candle. Then I set the order, so the stop price to the price to open is the last close, and here the stop loss gap. The condition for the seller are the opposite. But now let's reveal the basic result of this strategy. So, as you can see, this strategy is profitable only with the basic condition, but it will be statistically profitable? No. As you can see, it's not statistically profitable. We have an average success rate of 39, but the lower bound of our confidence interval at 99%, 99% doesn't go past the average success rate to break even. That is here. And as you can see, the number of trades is very, very, very low. So pay attention. The data are from March 2023. And yeah, as you can see, these are the result. Now, let's try to improve the strategy. I have tried to improve the strategy by analyzing the volume, sorry, not the volume, the buying power needed for each trade. And in this case, we can see the buying power needed for long position that were such as the graph of where trades were located, and here for the fail. And as you can notice, here we have more such as, here less, and here we have more fail. So maybe by filtering the buying power, we can improve the strategy. So I have tried to change the minimum of buying power, and I found that if you have taken only position that required at least um, 3,000 of buying power, I remind you that the starting account is $1,000. So what does what does 3,000 mean? So it means that you need 3 of leverage. as number of leverage. And the same thing was noticed for the short positions. And as you can see, by taking only into consideration positions where the buying power was above 3000, the average success rate increased. So let's try to add this criteria to our strategy. So let me add this line and this line. Now let's run again the strategy and let's see how it performs. Okay, as you can see, you would have been profitable with commission and without commission. The average success rate is 44. For a 2 to 1 risk to reward ratio, it's really good, but what is not good is that the number of trades is very, very, very low. And our confidence interval doesn't go past the average success rate to break even. So this strategy is profitable, but not statistically profitable. In order to be profitable, or you should have more data, but only the last year data, it's very, very heavy to download and to elaborate, so that's a problem. And only taking into consideration last year, the strategy is not statistically profitable. But let's try to run the test dataset anyway. I remember you that the test dataset are the most recent data, and the software have never seen this data before, so I haven't analyzed that. So let's change from train to test, and let's see how it performs. Okay, as you can see, you would have been profitable with an average success rate of almost 39, and yeah, you would have lost 5 points on the average success rate. That's not good, but it's okay. So, in conclusion, I would say that this strategy it's quite good, but the data isn't uh, isn't enough to say that the strategy is statistically possible. And yeah, anyway, it has an high such as win rate. And yeah, I remember you that these are not the financial advices. This strategy may not perform well in the future like it did in the past. So pay attention. St- these are not financial advices. It's only for entertainment purpose. This video, and for today is all, and see you in the next video. Bye.